Randy, I'd like to just quickly ask you again if you could explain what short sales are, and if we could touch on that again.
Sure. Well, short sales, which is what I really have focused on over the years and specialize in. So when a homeowner doesn't pay their mortgage, they fall into the what I call the pre-foreclosure foreclosure process. It can vary by state based on each state's policy or laws or guidelines. But in the end, it's the fact that the lender has now said, I'm going to obtain that property back because you're not paying the mortgage. That's what it boils down to. So what we do is then we try to attract and through various marketing techniques to get that homeowner to engage us to say, yeah, I need to do a short sale. And what that really implies is the fact that the home is over leveraged. So in this case, the homeowner owes more than the property is worth. That can happen because in certain locations, like we're in Florida, right? So, you cannot pay for your mortgage for maybe a year or 1 or 2 years. And then, so you're not paying. So you're actually chipping away at that equity. And then the lender eventually goes, okay, well, I'm going to file a foreclosure lawsuit to get that property back. And that could take a year, 2 years, whatever, depending on whether they fight it, respond, etc. So, every month that goes by, that equity is less and less and less. So therefore, they can't just sell it at a normal sale. So they would have to bring money to pay off the loan because they're so far underwater. So what we're doing is, and we're offering the lender, I guess the homeowner solution. We can buy your home. It's subject to the third party approval by the lender. And what we're doing is we're shorting the mortgage. That's the short sale. So the lender agrees to accept less than what's owed for the property. And that's a condition of, there's other conditions on the seller side when the property is transacted and closed. But the whole point is that, say, lender owes 250, we buy it for 200. Well, guess what? So, they've lost 50 grand. We've shorted the mortgage. They've agreed to that to get the property sold. And then, there could be some seller ramifications afterwards, depending on the structure, et cetera. But that's really it is. You're shorting the mortgage. The house can't solve its own problem.